the total of the credit side is 21,900 and it is the total of say debit side I think is 25,800. The difference is 16,100 and this 16,100 is your surplus and it will go to the capital, okay, to the balance sheet. Yeah. So friends, this is more or less the solution of this problem. Solution of this problem, only the income and expenditure part. And now I think some time is available and we can make our opening balance sheet. Okay. Now I am rubbing this part. So this is the difference. Please bear in mind it is 16,100. So 16,100 is our differences of expense, difference of income and expenses. Now you see how the balance sheet is prepared. How is the balance sheet prepared? How much?
18 minutes.
Huh?
18 minutes.
Huh?
18. Yeah.
So I am completing the balance sheet. So friends, we have some time and I am completing the balance sheet today. Okay. I am writing in stock. Assets. Liabilities. So friends, you have been asked to prepare the closing balance sheet as on that date. Okay. In the balance sheet, what is the first item comes? First item comes. So this is the closing case. Okay. But mind it. Balance sheet is just what is balance sheet? Balance sheet is a statement of assets and liability position of a particular point of time. Okay. It is a statement of affairs. It is a snapshot of the business status. Okay. Now. For the preparation of balance sheet, you need opening capital. No? Opening capital you should always have. You should always have opening capital. In case of balance sheet, profit and organization, what you have done, the closing opening capital is given, and to that you have added the profit earned during the year, and you have deducted any drawings that was affected during the year. Clear? But here in this problem, no such capital fund is given. Correct? So how would you prepare? How would you prepare? Is it possible? Now we think, any suggestion that can be extended by my friends? So someone is telling, sir, you prepare an opening balance sheet, and in the opening balance sheet, some assets are given. No, some friend is suggesting, sir, some information with regard to some opening assets are given, and out of that you prepare the balance sheet. Let us try. Just since capital fund, opening capital fund is not given, we have to prepare one opening balance sheet. We have to prepare the opening balance sheet. Now, balance sheet contains the assets and liabilities. What is the opening asset? Number one, cash, 3,000. Clear? So I am writing over here cash. So it is balance sheet of the inaugural day. Balance sheet as on 1/1/2019. Here. So what is the record? First of all, you have to search out what are the opening assets and what are the opening liabilities. Opening assets 3,000. Okay. Yes. 3,000. Some information with regards to some assets are given. No. Opening assets, the cloud has the following other assets. Other assets means other than this, okay? The other assets, sports goods 3,000 and books 2,000 and investment 6,000. So, sports goods, books and investment. Sports goods, how much? 3, 2 and 6. 3,000, 2,000 and 6,000. So this is the asset position of the opening date of the year, opening date of the period, accounting period. But there are some other assets which is not clearly given. You see, of the total subscription, you have received the subscription rupees 5,000, which relates for the activity. Okay. So at the closing balance sheet of 2018, closing balance sheet of 2018 is equal to the closing balance sheet of 1/1/19. Clear? The closing balance sheet of 31st/12/18 is equal to 1/1/19. Clear? And here we have seen that this year we have received a subscription of rupees 500, and that relates to previous year. So in the previous year it was our asset, okay? It was our accrued but area subscription. Area subscription, how much? 500. Clear? So this is the area subscription which you did not receive in the last year, but which you have received this year. And this year what we have done, we have deducted that amount of subscription. Correct? Clear? So now again you see that rupees subscription and rupees 600 for 2020. So for the coming year, I have already received the subscription. What we have done, we have deducted that amount from subscription. So the period has not been passed, but I have already received the subscription. So that subscription, advance subscription, is your liability. Advance subscriptions. Advance subscription. This is for 2020. How much it is? So this 600 is your liability at the closing date. Okay, understood? And again you see rupees 100 is due for 2019. So at the closing date of 2019, it is your asset because the time has elapsed, but you have not received that subscription. So the area subscription. Areas subscription. So 2019. And now, how much? It is 100. Just, I think I am clear. Any problem? Any problem? So the subscription, you are preparing the balance sheet of 2019. Okay? But 2019, the information given that there was a subscription of rupees 500 due for 2018. So at the opening of this year, you have that asset. So that is an area subscription. In the same way, this year, 2019, you have not received rupees 1,100. So that is your asset. And again, you have received some rupees 600 for the coming years. That time has not been elapsed, but you have already received that. So it is your advance subscription received liability. Because you have received the amount, but you have not paid the services. Here, you have paid the services, but not received the amount. So it is your asset. You have not received the services. You have not given any services, but you have received the amount. So it is your liability. Clear? Now see. Now there is now this year what is happening? The sports goods rupees 3,000, books rupees 2,000, and investment. And this year what you have purchased books. Okay, just think of first sports goods. How much sports goods you have? You have sports goods of rupees 3,000. Okay, and you have purchased how much this year? You have purchased sports goods of rupees 9,000. Clear? So you have to write sports goods. Sports goods. What is the opening balance? Opening balance of sports goods is 3,000. Opening balance 3,000. And purchase this year. Purchase how much? 9,000. Then what is the total amount? Total amount is 12,000. Clear? If any depreciation is charged, that amount would have to be deducted from here. But no question of depreciation is given over here. Okay. Then comes what? Books. These books. Books. You have the opening balance of books of how much? 2,000. Opening balance. 2,000. And you have purchased books of rupees 5,000 at purchase. You had investment of rupees 6,000. Any other investment? Yes. You have made an investment of rupees 8,000. So investment 6,000 and additions. Nobody can say the investment cannot be purchased. Investment is made. Okay. Add addition. That is additional investment. Here. Thus, we have recorded all. Therefore, you see, the closing balance is recorded over here. Oh, sorry, closing balance is not needed, you know. So, cash in hand. Now you see, the for preparation of balance sheet, closing balance 4,000. Even. Investment 8,000. And opening investment was how much? Opening investment was 6,000. So it was opening 6,000 and addition during the year 8,000. So total 14,000. Now charity show expenses, it has gone over there. Miscellaneous gone in the income and expenditure account. Post goods purchase 9,000. The 9,000 post goods purchase. Okay. And you had the opening post goods of 3,000. So it is total 12,000. if a depreciation, issue of depreciation is given, that would have been deducted over here, and depreciation will go to income expenditure account. But it is not given in our problem this year, in this problem. Now books purchased for so this is the additional book 5,000, and there was opening books of rupees 2,000. Yeah, so books are given. And now sports expenses, income expenditure account, electric charges, 6 expenditure account, salaries and rent expenditure, income and expenditure accounts. Okay. Now come opening balance of cash. It has gone to the opening balance sheet. Subscription 20,000. It has gone over there subject to this. Now subscription, of the subscription total 500 for 2018. It was our opening liability. Opening asset, because you get the service but not received the amount. Okay, but you have received this year, and this year in 2020 you have received rupees 600, for which you have received no service. So it is your area subscription and advance subscription, and 1,000 is your area subscription, and 100, and that is treated as your asset. Clear? Of the total sum of the industry is to be capitalized. It should be considered as a capital. Okay, and it should be considered. So subscription treated, interest how much? Rupees 100 you have received, but the total subscription was to be receivable is 500. So how much interest is due? So here is the interest, accrued interest. Okay. Accrued interest. Received 400, 100, but not received 400. So it is accrued interest. Clear? Accrued interest. And now there is no other thing. Now there comes the capital fund. Capital fund. Capital fund, opening balance. Opening balance. Add entrance fees. Add donations, add excess of, add surplus. Industry how much? 1,000. Production how much? 5,000. Surplus 16,000. How much it was? What is the surplus? 16,100. Okay. Clear? But you do not have that capital fund. Okay. Clear? How do you get the capital fund? You will get the capital fund from here. You have the capital fund. If capital is represented by some assets. Okay. So you have the opening assets of cash 3,000, capital sports goods 3,000, and books 2,000, investment 6,000, and area subscription 500. So 14,500 was your total asset, and that is the opening capital fund. Okay. So it is the capital fund. Capital fund. Opening balance. You should write balancing figure. Balancing figure means you have got this figure while balancing these two. The balancing figure. There. 40,000. Yeah, 4,500. 14,500. And it is 14,500. How much it is? 6. 36,000. So what is the total? What is the total amount? That's 3,000. What is the amount? Total 3,000 and sports goods 3,000. 3,000. Books 2,000. Investment 600. Yes. So is it total cost? 57,500. Anything left? Books purchase how much? Oh, books purchase 5,000. Okay, books purchase. Let's just make the total. We see what is the problem. Wow. 37,000? 37,200. So then some different. That's what it. Oh, sorry. Salary is remaining due to be paid. Salary is remaining due to be paid. So it is outstanding salary. Okay. Outstanding salary is your liability, closing liability. Yeah. It is how much? Clear? So your balance sheet is agreed? Understood? Just a thing. So, income and expenditure account yesterday we did. Today we have done. We have repeated what we have done yesterday, and again we have taken up another problem. Now, with the information given, we have to prepare the balance sheet. Preparation of balance sheet needs the information like the assets and the liabilities. Some information given over here regarding outstanding salary, advance subscription, area subscription, or prepaid subscription, pre-receipt subscription. So these things are given, and some other assets are also given over here. With the help of these assets and with the purchase of these assets, we are getting the figure that what will be the total assets. Both goods at the opening balance of 3,000, purchase rupees 9,000, the total is 7,000. If here in our problem, no depreciation has been given. If any depreciation is given, that amount would have been deducted from here, and that depreciation will go to the balance sheet. Oh, sorry, income and expenditure account. In the same treatment in case of books, opening balance 2,000, purchase rupees 5,000, so it is 700. Okay, 7,000. No depreciation is given. Accrued interest receivable 5,500, but we have received only 1,100, so it is remaining due. So it is your asset, and you will get it any time in this year. And area subscription, the subscription has been due. We have given the service, but I have not received the amount. That is the subscription of 100. That is your asset. And investment, opening balance 6,000. You have added this year 4,000, 8,000. Total, what is that? And opening closing cash in balance as well as given in the income. This is 7,000. So we have got the debit side of the balance. Now in the credit side, we have outstanding subscription. We have got from the information given. Area subscription 600, information given. And so now we are not getting the capital fund. Capital fund is the opening assets of the capital, difference between assets and the liabilities. And now, how they get it? Here some information is given. You have received interest fee, and that interest fee is to be capitalized, and it should be added to capital fund. Interest fee, donation 5,000 received, and it should be treated as a capital fund. So it is over here. But how do you get the opening capital fund? Opening capital fund is for getting opening capital fund, you have to prepare another opening balance sheet, and that opening balance sheet has been prepared with the help of the information given. So 3,000 cash. This is the balance of cash 3,000. Sports goods 3,000 opening balance. Books opening balance 2,000. Investment 6,000. And area subscription was given over here. Area subscription you have received this year. In 2018 it was 500. So it was an asset. and the difference of this is your capital fund. Okay, and now this is opening capital. To opening capital we have added what? We have added the entrance fees, donation and subscription. In some books we will see that the donation, entrance fee all are shown separately, but friend, that's a very bad practice. It should be added to capital fund. Clear? Now we have got total balance sheet. It is the total, whenever you are asked to prepare income and expenditure account, simultaneously you are also asked to prepare the opening balance sheet, closing balance sheet. So your basic solution is your income and expenditure account, number one, number two, balance sheet. And this is your what? This is your working note. Clear? So in this problem, what are the working notes we have given? We have made some assumption. What is the assumption? Donation is a capital receipt. Donation for 5,000 is a capital receipt. That is the assumption we have made. Number two, any more assumption? Yes. And the assumption is that interest receivable, it is receivable. There may be two types receivable. One may be the amount due, that may be receivable. But from this 500 I have taken that it is the total receivable amount that is to be received during this year, 500. But if you thought, if you have thought that 500 is due, in that case the total amount of interest would have been 6,600. Okay, but it is. And now this another working note, that is the balance sheet. Okay, opening balance sheet is a working note. Clear? Mind you, working note is as important as the basic solution. If you have, if you solve this two and you have got this amount from your friend, and he will be given it to you, big zero. Because therefore you have got this 14,500, so you must solve it. Okay? So while copying input. Thank you very much. Have a nice day. Go through the problem. Tomorrow I will come once again with the solution of this type of problem, and that will be the end of some critical problem, and that will be the end of this chapter. Okay? Thank you very much. Have a nice day. Go through and go on practicing on regular basis. Otherwise, you cannot carry on.